Hey everyone, John Stevens with PCS Homes here at eXp Realty, and it's time once again for a market update. We're going to be looking at the most recent numbers, and those are for June of this year, and those are going to be compared to last year. Now, we've seen a pattern emerge the last couple of months, and the pattern is intact. It's still here, and that is a slowing market. So we'll run through the numbers for you, and then we'll talk about what that really means. So the number of new listings was at 253, and that was down 13.4% from the year prior, and the pending sales were also down. We only had 57 pending sales go under contract last month, and that was down 66% versus the year prior. Now, the actual closed sales, we had 141 of those, and they were down 30%. So we're seeing a drop in both the pending and the closed sales. The median price is hanging in there. In spite of the fact that we've got fewer buyers in the marketplace, we've got price hanging in there. So that's a bright spot. And that was at $220,000. That was the median price. And that was up 22% from the year prior. Now the affordability, which is not so bright spot in the numbers here, was down. The index was down to 120, and that's off by 36%. And then again, that reflects the fact that it's getting more expensive to purchase. The prices have gone up, but more importantly, the interest rates have gone up, so that's keeping some of the buyers out of the marketplace. Now, at the same time, the affordability has gone down. The inventory has risen too. It's still at a little bit above, but it's near historic lows. It was at 521 homes on the market last month, and that was plus 16%. Last month, I think we had a plus 20 some percent. So we're seeing inventories accumulate. We're seeing the number of buyers diminish because of the affordability getting more expensive out there. But what does that really mean? Well, if you're a buyer in the marketplace, that means that yes, the rates have gone up. You're going to pay a little bit more than you did 3 months ago, 6 months ago, or a year ago, but you're still at within, even lower than historic rates. So the rates are actually not bad. And the other thing, the positive thing, is that the competition is not there like it was. A year ago, 6 months ago even, you might have had 4 or 5 or 6 people vying for that same house that you are. Now it's probably yourself or one other person that's serious about the house. So it's a little easier to get your offer in. Now on the sell side, if you have a house that you want to sell, what that really means to you is the market is slowing. There aren't as many buyers out there, and you really need to make sure that you've got the pricing done correctly up front and not really be too aggressive with your pricing. Get as much as you should for the house, but don't get carried away with the pricing because there aren't as many buyers that are willing to pay full price and probably really aren't very many that are willing to pay over your ask price anyway. So pricing is key on the sell side, and the buyer, you've got more opportunity, and you may have a little bit longer to look at each house and not be so rushed. So I hope that information was helpful. We'll be sure to get you more market information as it comes out. Have a great one.